Welcome back to another video. It is 8:36 a.m. on Wednesday? Is it Wednesday now? I think it's Wednesday. Yep, the 23rd. And here's some interesting news. Ripple co-founder moves $115 million worth of XRP, sparking fears of a sell-off. I haven't read any of this article yet, but he just moved it, right? That's what this title says, moves. Doesn't necessarily mean he sold anything. But yes, if a co-founder of Ripple sold that much Ripple, that would kind of say, well, this particular person who invented this cryptocurrency thinks that the price isn't going to do much better. He must know something. It would be a really bad thing if Ripple co-founders sold that much worth of XRP right now for the price of XRP, whoever still has it. Enough of that. Let me actually read the article. The massive hype surrounding Ripple XRP's token throughout 2017 created an enormous community that carried over into 2018 and 19, but this community of investors appears to have been dissolving as of late. Interest in the token has fallen off a cliff, with the lack of significant banking partnerships and tempered utility slowing the cryptocurrency's growth. That being said, it is still one of the largest cryptocurrencies by market cap, with plenty of investors from 17 and beyond still holding on to their tokens in hopes of it seeing growth and adoption in the future. One short-term event that could place some pressure on this is the transfer of $115 million worth of crypto by Chris Larsen, an early Ripple executive. It's possible that these tokens are being moved from his wallet to be sold via over-the-counter. Any pressure this news could place on the crypto may be offset by the secondary market token purchases that Ripple has been making in recent months. XRP price remains stagnant within the 20-cent range as Ripple starts buying. So, I just want to say, XRP hit an all-time high of something like $3.50 in the last crazy bull run. So, for me, I'm still pretty bullish on XRP. I'm not selling it. You do what you guys want to do if you have any of this, but I've been holding it since that time, I could have sold it. I didn't. I've been holding it for years now at this point. Hoping for another massive bull run. The thing about these bull runs, and I don't mean like, a bull market. I mean like a full-on bull run. Bitcoin is the mainstream headline for weeks and weeks as the price is out of this world, right? This happened in 2013 when it hit $1,000, and then it happened again in late 2017 to early 2018 when it hit $20,000. So another bull run, basically, another situation like that. The patterns are that the coins go up for more, right? So you have a $1,000 Bitcoin, a $20,000 Bitcoin. What do you think Bitcoin is going to be in the next major bull run? All-time high, maybe 100K, right? For Ripple, it's the same thing, right? So like, you have to kind of figure that the next bull run will be more than 350 at an all-time high price. So I'm definitely betting that Ripple will be worth $5, maybe $10 one day. I'm bullish on it, but I can't even remember why I even started mentioning that. Because I guess this headline, the price remains stagnant with the 20-cent range. It has been stagnant for a while. I see it as a buying opportunity. I'm very bullish on this coin. At the time of writing, XRP is trading up marginally at its current price of 23 cents. This is around the price at which it has been trading throughout the past several days and weeks. During the peak of the recent market-wide uptrend, its price was able to stretch as far as 32 cents before it faced massive inflows of selling pressure. One trend that may be bolstering XRP in the near term is the secondary market purchasing Ripple has been conducting. They spoke about this in the Q2 2020 update. A healthy, orderly XRP market is required to minimize cost and risk for customers, and Ripple plays a responsible role in the liquidity process. That said, Ripple has been a buyer in the secondary market and may continue to undertake purchases in the future at market prices. So I guess Ripple is buying XRP, which is good, I guess, right? It's good for the price. And then here we go. Ex-Ripple exec transfers $115 worth of crypto, $115 million per recent note from the wallet. Whale alert, Chris Larsen just moved over $115 million worth of XRP. He later stated in a follow-up tweet that these tokens were moved to NYDIG, a custodial solution for crypto. However, some users have observed that this would be one platform through which someone could sell a massive token stake over the counter. It remains unclear as to whether or not he intends to sell these tokens but his potential exit from the ecosystem could strike a blow to investor sentiment. Yes. Yes, it could. So now you're like left with this choice. If you really do believe that this guy is going to sell off 115 mil and the price is going to fall even more, you might want to sell your XRP right now. I don't. I'm chilling. I don't like to make knee-jerk decisions on articles like this, so I'm chilling. But yeah, and just so you guys know, over the counter means you're basically making a off. How do you say this? An offline verbal agreement with someone, right? Like someone you know, I'll sell you this much XRP for this much, as opposed to on an exchange where the prices are dictated by orders and them being filled and whatnot. So over the counter, the purpose of it is to get a bulk discount and to not drive the price up or down because you're not selling it on a market. Anyway, so that's interesting. And let's go on to something else that I saw. MicroStrategy's $425 million worth of Bitcoin purchase. What was the real impact? I've definitely been following this story with Michael Saylor and MicroStrategy. They own a huge chunk of Bitcoin now. This is a big tech company that basically said, hey, we have all this cash and it's probably better that it doesn't sit in the form of cash, as we know that the Fed is going to print the shit out of this money over the next 3 years. It's going to be devalued. This currency is definitely going to be devalued. Why don't we buy Bitcoin? Why don't we buy gold? That kind of thing, right? So they bought a huge chunk of Bitcoin. It's a big deal because if other tech companies, imagine like a Google or an Apple or an Amazon, they start telling the news that, hey, they also bought big chunks of Bitcoin. Remember, there's only a certain amount of Bitcoin. If you hold a single Bitcoin right now, clap your hands and do not sell it. Like, that is, I'm telling you, I'm super bullish on Bitcoin. Like, do not sell if you have over a single Bitcoin. You are part of a very elite club right now, and it's going to become more and more elite as people realize that Bitcoin is harder to mine and there's not that many left available. Okay, sorry. MicroStrategy's recent purchase of $425 million worth of Bitcoin rapidly grasped the community's attention. More specifically, people wonder if, what, or how much was the impact on Bitcoin's price, and different theories emerge frequently. Take one, MicroStrategy buys Bitcoin, the large NASDAQ-listed company providing business intelligence, mobile software, and cloud-based services, purchased its first batch of $250 million worth of Bitcoin in August. Dollars worth of. Merely a month later, MicroStrategy doubled down on its investment by buying $175 million more worth of Bitcoin. Along with the massive purchase, the company's founder and CEO, Michael Saylor, completed a 180 transformation. Back in 2013, he predicted wrongly Bitcoin's death, while in 2020, he named the primary cryptocurrency a legitimate investment asset. Yeah, so this guy had like a big red pilling. He was definitely a major crypto hater, and then not only completely changed his tune, but went hard for his company. Since then, Saylor has continued highlighting Bitcoin's merits. In fact, he may have become a Bitcoin maximalist. Just yesterday, he outlined a major difference between crypto asset networks like Bitcoin and crypto application networks like Ethereum and stablecoins. Moreover, he posted a chart of the real Bitcoin dominance index, displaying 93.5%. This is the metric reviewing Bitcoin's market share compared to all other proof-of-work cryptos attempting to serve as money. Following such a sizable purchase from a Wall Street trading company, the community began speculating regarding potential price effects. After all, MicroStrategy bought nearly 0.2% of all Bitcoin to ever exist in just a month. That's pretty crazy. However, Bitcoin's price remained relatively calm. There was no sharp spikes or breakdowns, or maybe only on the surface. This is where it gets interesting, right? Because you know they bought that over the counter as well. I really doubt that Michael Saylor had a few of his people like go onto exchanges and buy the maximum amount that they could per user, right? Like, I really doubt that. When you're making a purchase of Bitcoin like this, you don't want the price to go up. You want the price to come down, but you want to buy a huge amount, which if you had done on a market exchange, you would be driving the price up significantly. So you do this over the counter, arranging this with someone or some entity that is also in agreement. But let's see what this article says, because I'm curious now. Nevertheless, he believes that Bitcoin is in an era of speculative trading dominance on unregulated derivatives. Markets and inorganic swings of 4,000 are achievable by whales. In contrast, a $700 up movement by an organic spot buy will be lost in technical short-term charts. Correct. That's nothing. Later on, FTX CEO Sam Bankman-Fried estimated that the price impact over a few days would be around 5%. However, he noted that if you are not looking for it, you'd miss it. If you are looking for it, it's obvious, though. He based his math on previous outcomes from sharp price drops, including the mid-March sell-offs. Interesting. People are basically trying to figure out how much and what kind of actual effect buying all that Bitcoin had on the price. While most of the community focuses on whether or not Bitcoin increased in value, a popular Bitcoin proponent, Pierre Richard, broached another angle. Quote, the biggest problem in economics is that we can't see the counterfactual where Saylor did not buy and the price is 9,000 today. Meaning that there's no way to know what could have happened if MicroStrategy's CEO hadn't bought 0.18% of BTC's total supply in a month. Additionally, the precise timing of the purchases is still unclear, making it rather difficult to draw definitive conclusions. That's what I thought. Nobody had access to just when it happened and you know what I mean? Okay. In some more general type news, Bitcoin market is weakening after macro-based sell-off on-chain data suggests. Let's just take a look at the prices real quick. Give it a little refresh. I guess that's the drop from yesterday that we saw, and I guess we've just been kind of trading sideways since then, which you can kind of see not really much has changed. Chainlink is definitely down though. It's now number 10 coin. Interesting. And yeah, any other big winners or losers in the top 50? Uniswap again. This is some weird stuff though. Uniswap apparently had no drop like the rest of everything did. I don't know much about it. It's a new one. Or is it though? I feel like it's been around. I feel like you could only get it via airdrop in the past, and I don't know any of it. Just another one to watch out for, I suppose. Hedge trade, never heard of it. Whatever. Okay. But let's see. Key Bitcoin on-chain metrics have flipped bearish this week, suggesting the top cryptocurrency by market cap may extend its recent price losses in the short term. On Tuesday, the net inflow of Bitcoin to exchanges, measured by the total change in exchange balance, was 36,800 Bitcoin. The biggest single-day rise since the market crash on March 13th, according to data source Chainalysis. Since September 20th, the net daily inflow of Bitcoins to exchanges have been increasing and trade intensity has been declining, Philip Gradwell, an economist at Chainalysis, says. This, he said, indicates a weakening market. Okay. The uptick in net inflows represents an increase in selling pressure since investors typically move coins from their wallets to exchanges when they see a possible need to liquidate their holdings. Further, Bitcoin's trade intensity, which measures the number of times an inflowing coin is traded, fell to a one-year low of 1.75 on Tuesday. That's actually pretty cool. These guys are tracking when people are moving their coins to exchanges. It's interesting. A big sell-off is coming. Further, Bitcoin's trade intensity, which measures the number of times that an inflowing coin is traded, fell to a one-year low of 1.75 on Tuesday. That's a sign there were not enough buyers to absorb the spiking inflow of coins. Okay. Long-term bull bias intact. Bitcoin fell by over 4.5% on Monday as investors bought the safe haven US dollar but sold equities, gold, and other fiat currencies on renewed coronavirus concerns. I don't know why people would sell gold because of coronavirus. It seems like a reason to buy gold. But we will get into it. But gold did take the biggest hit that I have seen since I started doing these videos in the last month or however long it's been. The drop set the stage for a continuation of the pullback from August highs above 12,400. Immediate supports are seen at 10,000 and 9,868. However, while Bitcoin may suffer deeper declines in the short term, the overall bias remains bullish. We are still above $10,000, only the third time Bitcoin has maintained this price level for multiple weeks, and long-term investors are buying Bitcoin in increasing amounts. I mean, I don't know if you guys do this, but I set my fiat gateway, let's just say, that could be Coinbase for some people. I set it to buy a little bit of Bitcoin every month. And if everyone started doing that, buying $10 or $50 worth of Bitcoin every month, if everyone on the planet started doing that, Bitcoin would be gone. The price would be out of this world. But it cannot, and I have to emphasize this again, even though it's like common knowledge for anyone who's done their homework on Bitcoin, but just in case you don't know, it has a finite amount of 21 million coins. It cannot be created. And not a single additional coin can be created after 21 million have been mined, which means that everyone else's coins, the value will go up over time. So it's a appreciating currency. It doesn't inflate. It deflates. So one of these days, when everyone realizes that, people who hold one Bitcoin are just going to be so glad they did. I kind of went off on a little bit of a tangent there, but I'm super bullish. And I guess this article suggests that the options market is also showing bullish bias on longer term frames. Anyway, the heat map is always fun to look at, right? I just think it is. My favorite coins are in the red for the most part. And let's check this out. You guys should see this. Gold is worth $1,864 right now, an ounce. Silver is worth 23. I mean, both have really taken a hit here. And it's funny because I said I was going to buy in the last few days if this kept happening. And maybe I will. Maybe I'll buy. It could go down further. I'm probably just going to chill. I don't want to make knee-jerk decisions. I'm going to chill. Let's see where this goes later. Let's just say if silver goes to 20, I would absolutely buy. And if gold went to, I don't know, like 1,750, I would probably buy an ounce of that. Silver price slumps to 7-week low and now trending down with so much market volatility. Stay on top of... No, okay. Excuse me. Didn't mean to read their ad. Silver prices are sharply lower and hit a 7-week low in morning dealings Wednesday. A surging U.S. dollar index that hit a 7-week high today is helping to pressure the precious metals markets. Just this week, silver prices have shed almost $4 an ounce, $4. Wow, it's true. Silver prices this week have seen their near-term uptrend negated, and prices are now in 6-week-old downtrend on the daily bar chart. The near-term technical posture for silver has deteriorated rapidly, and some longer-term chart damage has also occurred as prices this week produced a bearish downside gap. There is not much chart support that shows up for silver until prices reach major psychological support at 20. Still, silver bulls can argue a price uptrend is still in place on the weekly chart, but the bulls need to stop the bleeding very soon to keep that uptrend alive. December silver was last down $1.13 at $23.39 an ounce. Just a little bit more. If it dips, just a little bit more. This is quite a hit, so we'll see how it goes. That is going to do it for the morning update. We will see you tomorrow. Take care.